AI startups dominate the funding landscape, from mega deals like xAI to more modest investments. But how do venture capitalists see this market evolving? This week, I'm joined on stage by 4 venture capitalists to help us dig into these questions and more. I'm Jennifer Strong, and this is Shift.
Now here on the steering column is a device called Auto Cruise. You simply set the speed you want.
Self-driving robo-taxis are already on the road in 2 U.S. cities.
As the disc rotates, a mirror reflects the light in the way that depends on how the signal was recorded.
This is the 100 terabyte I present to you Electro, the Moto Man. Ladies and gentlemen.
I would say that one of my greatest skills is my ability to interact with humans.
This episode was taped before a live audience at Europe's largest tech conference, Web Summit, in Lisbon, Portugal.
Hey everybody, thank you so much for joining us. I'm Jennifer Strong, I'm a tech editor based in New York City, and we have an awesome panel for you. We are going to learn so much from all of them. Why don't we dive right in with some introductions? Kanu, you want to go first?
Hi everyone, my name is Kanu Gulati. I'm very excited to be here. I'm a partner at Costa Ventures. We are a multi-stage fund based in San Francisco, but invest globally.
Hi there everyone, I'm Kevin Jang, the managing partner and co-founder for Mangusta Capital. Prior to Mangusta, I was at SoftBank for the last 10 years as part of the Vision Fund investing team.
Hi everyone, I'm Carlos. I'm partner at Faber. Faber is an early-stage VC firm based out of Portugal. We're specialized investors investing at pre-seed, seed stage in deep tech companies.
Hey everyone, my name is Clem. I've been dedicating this last 2 decades in creating startups and investing in startups. I'm French, if it's not obvious by now. Very happy to be here with you guys and discuss this topic of AI.
I want to start by asking you all the same question, and that is, how would you characterize the moment we're living in right now in terms of funding of AI startups?
I can get us started. We've been investing in AI since a very long time, since 2014. We were also lucky enough to invest early in OpenAI and have been watching the space, especially with this new trend with generative AI, very, very closely. I think there's a number of opportunities now to think about every vertical in the enterprise, for example, in every industry, I think can be reimagined because of the power, the generalizability of these models. And that really, really excites us. We think there's a ton of opportunity and we are in the very early innings. And that keeps me really excited and bullish on investing in AI. We think there are new business models that are emerging because the investments are moving away from just plain SaaS to now services, which traditionally were not even venture-backable businesses because it was only growing with number of people, for example, a recruiting agency. And now you can invest in companies that are growing with the number of digital agents, and that is really changing the landscape of the work getting done and how you can price and capture the value that you are building. I think there's a ton of opportunity going ahead, so I'm very excited to continue investing in AI and the capabilities of it.
I think I like to really break it down into a couple of different, say, vintages or eras. And I think we're still in one of the very early eras of AI investing because we just had a generative AI boom where we've got obviously large language models, diffusion models, the foundation of GPUs and chips that need to be made and hardware that you need in order to fund the continued AI revolution. But I think we often forget about even just the past 10 years. I will say we've also been in an AI revolution of big data, machine learning. And so I think we continue to see a lot of different eras of AI investing from, say, the big data machine learning phase to now the generative phase. And I think we're still in the very early stages of seeing how this all plays out within different industries. If you think about everything from medical technology to fintech to legal and tax, I think there's so many verticals out there where founders are still building very early stage products using the new technologies, whether it's hardware, software that we have, and being able to really harness that technology. I think we're going to see a lot more AI companies come out in the next 5 years that'll be even more exciting as we continue moving forward.
Yeah, I agree. I mean, we've been investing in AI for a number of years now, and we certainly have seen a huge development in the space after the boom of the LLMs and Gen AI and so on. There's a lot of money being invested in this area. We believe, in a way, it's just the beginning, but there are, apart from the large language models and the kind of more generic applications of AI, there are still significant opportunities to be looked at in vertical AI, AI integration into vertical industries, but also the whole AI ecosystem, all the other things that also support AI. AI today spends inordinate amounts of energy. It's still super inefficient, and there's a lot of interesting developments being researched in areas to support faster and more energy efficient AI, less consumption. And all of those developments can also help bring AI to the next level. So we're looking at different areas within AI and not just the development of new models and new AI paradigms.
As an investor, private investor, I see AI a bit different other investment that I have made in the past. For me, it's a new era. In technology, we've discovered, the computing industry, the internet, then the mobile, and now the artificial intelligence. The only difference with artificial intelligence is that it's going way faster. So mobile, it took 10 years, computing a lot of years. I was one of the first investors, I'm talking about 7-8 years ago, of Hugging Face. And I've seen AI evolving over the time, and I can say that, from my personal opinion, that we are at the beginning of this new era, that a lot of changes are going to happen. I think it's a good momentum. I personally receive a lot of opportunities more and more, so you have to understand a bit, technology and have your fundamental of investment, but I think we're at the beginning, that we're going to live exciting moments, and that probably the world is going to change faster than before.
Sure. All right, so that's the funding landscape right now. There's a lot of talk, but I'm curious how you feel, and everybody just jump in. Don't feel like we need to go in a certain order here. There's a lot of talk about a shifting landscape. Is that how you view this? Do you view there being any big shifts in the immediate term right now in terms of funding for AI startups? Or do you think we'll kind of continue on the path that we've been seeing for now?
I think there is a shift. I feel like one of the larger shifts is really from the hardware to really perhaps more of the software side, maybe more for the infrastructure side, whether it's hardware or software. Being able to, whether it's the large language models, which obviously have gotten a ton of capital, but they're the foundation of what a lot of other products are built on, right? So I think in a lot of ways, we're going to start to see that shift, where still a lot of capital is going into, say, the OpenAIs, XAIs of the world. But I do also think that on the application side, I'm starting to see a lot more activity across sectors that maybe haven't gotten as much attention, right? So coding, web development has been one area. There's been a lot of large funding rounds, unicorns being developed. Legal AI is another one. And these make a lot of sense because it's very textual-based, text in, text out kind of applications. So I think large language models do obviously lend itself very well to that. But I think over time, new diffusion models, which help generate images for various use cases, and also just industry-specific applications outside of those pure textual use cases, I think will be more prevalent, and we'll see more funding go into those as well.
Yeah, I would struggle to say whether there's a fundamental shift or just an evolution or continuum of what we're seeing. But I would say that, I agree. There's a lot that was developed on top of LLMs, and LLMs still have ways to go in terms of improvement. But there's been some talk also about the limits of LLMs and where the improvement starts kind of diminishing independently of how much computing power you put into it and how much data. So what's next is a question mark. I think that there's a number of more hybrid approaches built on top of LLMs that are going to be interesting to see develop. But also, as I was saying before, what are the changes in terms of computational paradigms and computational architectures that will support the next generation of AI, both in terms of computing power, but also in terms of efficiency. I think that as I said, there's a lot of focus around LLMs, but there's a number of other things that are being developed around it that not only can complement, but also maybe even substitute it. And I think it's interesting to see how those ones are going to develop as well.
I'm in the camp that this is a much more of a step change as opposed to just the evolution. For example, we are moving beyond the co-pilot model already. I agree that we started with coding and customer support co-pilot models as the first use case, but we're already in the autopilot where most of the tasks end-to-end are being performed by agents that are running on top of these large language models. And yes, there is still under human supervision because these are not perfect, but the pace of improvement, the costs coming down, how well these models are working with a system of agents, how well these critic actor models, there's another LLM checking the performance of this LLM. There's so much innovation happening that is just creating completely new business models. And then there's a whole world around robotics. Just like large language models became generalizable enough that each of these models are better at individual tasks, better than the task-specific models that we worked with in the old school NLP days and summarization or sentiment analysis, etc. These models are way more powerful already across a range of these tasks. Similarly, I think there is a thesis that there will be a large language models in robotics, and I think that big technology jump will allow us to reimagine every vertical, every line of business. And so I think of this as a very big step jump and very different from every past innovation. And I completely agree with Clement that the pace of change has been amazing. You've not seen that one company, OpenAI, announced a model sometime in 22, and already the world has completely changed. Like we don't even remember what was before that, including very large hyperscalers. Everybody's earnings calls are all about what is their large language models and generative AI policies going forward. And I think that's a massive change. This pace of change was never before.
The pace of change, is it changing fundamentally how you invest in AI? Or do you consider things to more or less be going to continue down the path? You all have done a beautiful job laying out the complexity of the current moment. But how nimble do you have to be right now?
One, in addition to OpenAI, we've been looking at other foundation model companies from a sovereign approach. We've invested in a company called Sakana out of Japan because we do believe that certain countries, certain geopolitical areas will want to have and own their own model, especially for defense, for their own internal infrastructure, for their own, for national security applications. So similarly, we've done an investment in India, and we continue to look for different big economic powers. That's just on the infrastructure side. Again, coming back to new business models or completely rethinking companies, we've invested in a company called Cognitos, which is trying to reimagine what RPA should look like. Earlier in RPA, for every dollar that is being spent on software, up to $5 is being spent on humans to continue maintaining that software. And that is very expensive and cumbersome for enterprises. Can we reimagine that? And that can be done now because business folks that do not have a technical background can, with the help of LLMs, directly code business logic in a way that can be automated and maintained and changed and edited as needed. And that can completely reimagine. So I wanted to give some examples so people get more ideas about what they could focus on and what they could be building. But there are tons of opportunity out there. And we look for all of those different areas with a different thesis about large markets, what is capable now because of the capability of AI, and where is a new business model that can be built and captured.
I agree with you, Jennifer. It's a lot of change, right? This environment, every day there's new news, there's a new model, there's a new company, and it makes it, I think it's fun, obviously, as an investor. That's what we enjoy, that's what we live for, is seeing all these new developments come out. But it certainly makes our job hard too, right? Because we've got to stay on top of it, we've got to analyze it, we've got to think, okay, well, how do we think the world is going to take another step forward, right? So it also requires a second layer, a third layer of thinking beyond that. And so I do think that in this environment where things are changing very quickly, you have to stay nimble. You have to be in the hub of it all, which I think every country has a lot of different hubs as well. But I think one of the primary ones is Silicon Valley, where a lot of these new models and new developments are coming out. And so you've got to stay with an ear on the ground, kind of listening to everything and figuring out how are things going to change.
How do you decide what to invest in right now? What factors are you looking at?
Personally, I come from the internet industry and I created startups. So for me, it's easy to analyze what I look for in my investment because it's basically what I do for a living since 20 years old. It's a combination, it's like a recipe. You need all the ingredients. You need first the founders, so you need the visionary founders, gladiators, people that have a lot of resilience. You need a product, you need a vision, you need a team, you need technology, you need to know how to raise funds. Capital today is essential to create a company and scale it. Those are the aspects that the specifics I look when I invest in a company. And the most important is the founders, because out of the 50 investments I did, I will say that none have pitched me what actually came up at the end. None. You have to be flexible, you have to understand your environment, be able to change, and this is what I look out of founders when I invest.
So, we're deep tech investors, so first and foremost, we like to invest in very strong teams from a technical perspective. We like teams that are passionate about hard-to-tackle problem and can find a good technical solution that is somehow proprietary to them. We always look at teams kind of coming out of R&D and universities and research centers and so on. Not all of them, but we do have a preference for those kinds of teams. And then it has to be founders that have a strong ambition, looking at very large markets, wanting to solve a real-world problem that has already been identified, and that are savvy enough about the technology that they can, in a very clear and simple way, explain it to anyone, because as soon as they go to market and then start selling, they will be able to do that. Having some sort of business savvy is nice to have, but that you can learn a little bit, but having that strong technical background is super important. We also look at founders that have, even at a research level, that understand a specific industry and vertical very well, to see whether the solutions that they identify really adapt to the pain points that the clients are feeling. Team and market are first and foremost. And then we also validate the technology. We work with a strong network of advisors that help us then to validate the technology, validate the product, and we do all the other analysis. But it starts with the team, and it starts with an interesting market and a strong solution for a problem that is complex.
The question you posed, Jennifer, is one that I get very often because we're very focused on application layer businesses for AI. And I think the kind of word of the day nowadays is GPT wrapper, which everyone feels like, okay, you don't want to invest in just another GPT wrapper of something built on a foundational model that doesn't have anything that's really differentiating, right? And so the way that I kind of explain it to a lot of investors as well as companies is we're typically looking for three key things on the AI application layer that's really important for us at Mangusta, which is all we do. One is proprietary data. So if you have data moats, whether it's self-generated data that you've gotten plugged into your customers' databases, so you are able to train your model off of proprietary data that no one else has access to, or maybe you have some way of actually being able to have access to proprietary data that is not necessarily through your customers, but other ways you've acquired the data or you've built it out over years and years. That's one really important aspect that you can't really differentiate, you can't really copycat the data there, so you're really differentiating yourself and training your model off a very unique set of data that no one else has, and it's hopefully better fine-tuned for a specific use case as a result. I think the second thing we're typically looking for is proprietary integrations or regulatory compliance integrations that you have that no one else has. And so, for example, if you think of selling to enterprise, selling to SMB customers, the fact that you can deploy and you can plug into their ERP system, their CRM system, or their payments gateway right away means that you can deploy in days versus it takes weeks or months for someone else to deploy with the same customer. And so I think that's another really important go-to-market advantage that we're typically looking for. And then the third thing that I think is quite simple, but it's also really important, is, as everyone has touched upon, a management team that knows how to execute, go to market and scale fast based on their previous experience, the skill set that they have, but also a first mover advantage, because we saw this in the legal AI space where a company like Harvey, which is now kind of a household name, but they were one of the first entrants in that space. They got preempted by Sequoia a couple times now. They're a unicorn plus business, and effectively have cemented themselves, I think at least reputationally, as one of the leaders in legal AI. And so having that first mover advantage does really matter a lot when it comes to some of these verticals where you can establish a brand and product that customers recognize.
We have a more of an overarching framework. We think about every startup as a series of risks that you have to retire. And for us, it is important that we resonate with the founding team on, in that case, at that stage of the company, for that market, what are the biggest risks? And for different funding rounds, which risks are we buying down? And that changes very drastically. In the case specifically for generative AI or AI-enabled robotics, I think we do focus on the long-term defensibility of a company. It could be related on understanding why this might be, why couldn't OpenAI do it, in the next few months? Or why couldn't a fast follower or another large language model provider company do it? So understanding that, in addition to, is there either access to proprietary data or simulation-based generation of data, or data that you can reason on, which is siloed away in the organization in a smarter, more innovative fashion? Like, what is that access? And then can you attract the right team? Have you bought the rights? Have you built an image of what this company's vision is, such that you can get the best talent drawn to you? And a number of such things. So depending on the stage of the company, the market, depending on the, what is that they're pitching, what is the key risk, and then we try to identify the team that best understands or at least resonate with us on what we think are the biggest risks and how we might buy those down. And for every stage of the company and different markets, that changes.
I'm curious how you evaluate markets outside the US, and if there are specific places that you see unique opportunities outside the US.
I mean, being from outside the US,
yes,
we do see significant opportunities in Europe. I mean, as an investor, we're mostly focused in Southern Europe, but we also invest selectively in Europe and also outside of Europe. But we do have a preference for Southern Europe. What we see is that there's significant talent spread around Europe, not just in the US. There are some certain expertise where certainly having a US presence helps, but there's a lot of good technical talent elsewhere. We've been very successful in investing in lots of companies that started with operations based in Iberia or somewhere else in Europe, that then very quickly scaled to the US, establish operations there, tap into the US ecosystem, but have a large portion of their tech and product teams based here. That's a model that we've been investing on for a number of years now, and it's been working quite well. So we do see significant talent, not only in Southern Europe, but also in the UK, France, in Eastern Europe. There are some very good universities here, and we are looking at that as well.
I focus mainly on the US, so we don't have any geographic restrictions technically. I do have a portfolio company in Singapore as well, but I will say, I think, there are certain geographies that have specific specialties, right? For example, I think a lot of parts of Europe, a lot of parts of Asia, for example, Korea, have a lot of consumer expertise. And so when it comes to consumer products or media, oftentimes we will look at companies that seem to have an advantage based on where they've started. Perhaps their team, perhaps their skill set is just very well suited for a specific industry. But really, I agree, talent is everywhere, and it's our job to find it wherever it is.
Yeah, we're not focused on any one geography. We look at talent, we look at centers of excellence, we look at universities specializing in certain areas, in certain technologies. We were the earliest investor in GitLab, which has been one of the earliest companies to be completely remote, fully remote from day one. And then we try to identify certain trends. For example, we've invested in a few companies in India that is leveraging the recent trend of digitization of healthcare, or new opportunities that are coming because of sovereign models. We try to keep up with everything that's happening, and so I think there's a ton of opportunity outside of the US too, and we are very active investors.
All right, so time has absolutely flown by here, and there's a ton that we have not gotten to yet. Maybe before we go, kind of briefly, what's one thing each of you are going to be watching for over the next 6-12 months?
You put us on the spot, Jennifer.
We will certainly be watching for the new developments in AI because it's impossible to predict what's coming next. As I said, we're very focused on also things like more efficient AI, more efficient paradigms for AI, but at the end of the day, it's impossible to predict where AI is going to be in 6 to 12 months. And what we're focused on is in trying to identify those trends as soon as possible.
I'd say we are in the very, very early innings of AI and the capability of AI that can be captured. So don't over-engineer trying to build your own models if you don't have a specific reason why they will be 10x better. And don't build a model around today's cost of these models because these costs are absolutely coming down. So I feel very hopeful that there will be a lot more capability and just better reasoning and better multimodality and lower costs coming from the large language model providers, and that founders should be betting on those and building around what's coming.
I was going to make a joke and say we should see what Elon Musk does next. And we should be we should see what he's up to because he's obviously got a lot of more firepower more recently. But joking aside, I mean, xAI is actually one of our portfolio companies, but I think what I'm also really excited about watching is just what happens within the energy space. I think it was mentioned earlier, energy costs and efficiency is going to be super important in this new age where we have a ton of energy requirements for running the models, whether it's training or inference. And so I think for us, finding what is that new solution, whether it's fusion or other kind of options, I think that's another really interesting area that we're keeping an eye out and watching.
All right. Thank you all very, very much, and thank you all for being here.
This episode was produced by me and Emma Silikins and mixed by Garrett Lang, with original music from him and Jacob Gorski. Thanks for listening. I'm Jennifer Strong.
From PRX.